proud and honored to be involved with the Insurance Training College, obviously after going through all the initial trainings and also adding in a couple of my own personal initiatives. I am very, very, very passionate about the subject of bancassurance, and to be able to share that knowledge with you here today and on all platforms that will be available is indeed a great honor. Like Jonan also said earlier, it is indeed very interesting times, very, very challenging times also, but to thank you very, very much for making your time to tune in, to dial in or to log in and be able to share with us this new journey. This is the first time that the Institute or the training college is actually doing this, and to be pioneers in this is very, very interesting. So today also, Jonan said is Labor Day, so also to pass on my sincere appreciation to all the laborers who are keeping us safe, the health workers, and also the enforcement police officers who are making sure that some of the stubborn things are actually being kept. So we're discussing bancassurance, and it is a very new channel. We've only been licensed for 3 years. So many things are actually changing, so many things are actually happening, and a lot of focus is actually on this channel. Many people are actually looking and saying, what is actually bancassurance doing? What is the contribution of bancassurance? And people are actually keen now, whenever results come out of the insurance industry, one of the first lines is how much did bancassurance contribute? So there is a lot of effort, there is a lot of attention to bancassurance, to make it successful and be able to increase the insurance penetration in the country. So when we're speaking about bancassurance, bancassurance is one of the channels where we actually distribute insurance products, but it is embedded into the financial services sector. Now, the financial services sector has a myriad of different players, different contributors. So in our first slide, we'll be looking at the financial services sector. Who are the different players in the financial services sector? And what does the financial services sector play in terms of bancassurance? What does each player do to actually make sure that the wheel of bancassurance is actually moving as it should be able to move? Then we will also understand the banks and their role, the regulation of the banks. We'll speak about the main products of the banks and how the insurance products that we are going to distribute are embedded into some of those products to make an entire package for the customer who is going to buy that product. Then we'll also touch slightly on insurance regulation and see what are the do's and don'ts of bancassurance. So like we have talked about the financial services sector, what is the role of this sector in the whole wheel of bancassurance? Now, in the sector, we are looking at different players. We're looking at insurance services. We are looking at banking. We are also looking at pensions and the pension regulation system. We are looking at forex bureaus, people who remit money. Also, money lenders are actually a bit of that financial services sector. So all these players come together to see how the whole bancassurance wheel can keep moving. Now, later in our presentation, we'll be able to see the role and how these different players make a contribution to the whole bancassurance arrangement. What does the insurance sector do? What does the bank do? What does the money remitter do? What does the forex bureau do? And what can they actually be able to do better to actually make our bancassurance distribution channel a much better channel? Now, these financial services sector, obviously we're looking at things like finance, facilitating payment systems, checks, credit cards, mobile payments, money transfers. So in there is where we can actually be able to pick in and say, are we able to make more channels of maybe premium payment, or to upload and actually be able to sign up for insurance policies. So that's the facilitation that we're talking about. Also, the financial sector is also contributing to job creation through direct and indirect employment. We have agents who are employed, especially in the insurance sector. We have bank employees. We have direct sales people who actually go out there and be able to sell. So there is a contribution of employment. Then risk management, especially in insurance, we're looking at how these insurance products are actually able to help manage risk. For the risks that customers actually feel they're most pertinent, how does a customer actually be able to purchase a product to mitigate that particular risk? Then the pension sector, their contribution is especially in terms of retirement and long-term planning, plus also investment. The pension sector, which is run by the Uganda Benefits and Regulation Authority, also relatively new, about 3 years old, but they are making very big strides in actually contributing to the financial services sector. So in brief, that is what the financial services sector does. Now, the insurance industry specifically is run by or regulated by the insurance regulator, the IRA. Now, we have over 20 non-life insurance companies and 9 life assurance companies. And there are also various other bodies that actually fall under the insurance regulatory authority. We have brokers, we have loss assessors, we have loss adjusters. The agents also fall under that body. The insurance training college it also falls under the insurance regulatory authority, which is the training arm. Then specifically for bancassurance, the Bancassurance Technical Committee, which falls under the Uganda Bankers Association. Now, this is a committee which speaks for the various bancassurance agents. That is a committee which lobbies for regulation. That is a committee which lobbies for different changes or amendments to certain memos or workshops or something like that. So the Bancassurance Committee specifically will speak to the insurance regulator regarding bancassurance matters. Now, under insurance, how these insurance companies actually distribute. These are individuals or companies which register still with the insurance regulator to be able to now distribute insurance products to the population. So these are all registered. We also have insurance brokers. These are more formal. Most of them are actually licensed and registered by the insurance regulator. Banks also have been licensed. We've talked about the bancassurance regulation. Banks have now actually been licensed to distribute insurance products. So that is another channel of insurance distribution. The internal sales force of an insurance company or of a bank, that is another distribution channel where the insurance company would have its own salespeople who are employees of the company to actually be able to distribute these products. Another very fast-growing channel is also the internet and mobile services. We've seen very many insurance companies now go digital, and now they're starting to distribute their products where someone can fill in a proposal form, someone can sign on for insurance products just by logging in, either through their phone or through the internet to actually be able to access these products. So these are some of the new and different insurance distribution channels. Obviously, we wait to see what will happen post-COVID. I'm sure with the different challenges that the insurance companies have actually been able to go through, people are sitting down and thinking of how to actually do business together. So much as these times are interesting, I know there will be certain new developments which we are looking forward to see. And some of us are actually sitting down and thinking of how we can actually do business better. Now, in our next slide, we'll be talking about bancassurance. What is bancassurance? Because many people actually look at the term bancassurance and try to figure out what this whole concept of bancassurance is. So we'll be looking at bancassurance in detail, the definition. We'll also be looking at the evolution of bancassurance. Where did bancassurance actually start? And which countries are actually more successful, which countries are least successful. Then we'll touch a bit on why those countries are successful and why some of those are least successful. We'll also discuss Uganda's bancassurance journey, which is very, very important, I feel. Where did we actually start from and where we actually are today. Also bancassurance, and then the critical success factors of bancassurance. What are some of the things that we must do or that someone should be able to have to actually make sure that if they're actually going under bancassurance, the whole concept or the whole distribution of channel of bancassurance is actually very successful. Now, very simply, bancassurance is the selling of insurance products and services through banks. Now, earlier we spoke about banks being a distribution channel of insurance. So the banks then partner with insurance companies to sell and distribute insurance products of the insurance companies to the bank's customers. This is generally done through the bank branches. Now, the most important thing in this definition is that the products that the bank is selling or the products that the bank is distributing are products of the insurance company. The products are not bank products, okay? What the bank would then do is embed or attach an insurance product to one of the bank products, maybe like a bank account, or attach it to a lending account. But the most important thing is that the risk and the product is actually carried by the insurance company. So in brief, that is what the whole concept of bancassurance is about. Now, this whole concept emerged in the 20th century, and Spain and France were the pioneers of the whole concept of bancassurance. And it is no doubt that they are some of the most successful countries where bancassurance is thriving. In the 1960s, there was a full effect in France after laws were passed. But in the background, agents or traditional families that would actually be able to arrange insurance for villages or families successful. And much later, in the 1960s, 1965 to be exactly, where Barclays Life started actually distributing bancassurance or insurance products to their customers. And that is actually how it actually picked up. Now in Asia, we've seen countries like Malaysia, Singapore, India. Those are actually very, very big on bancassurance. While in South America, Brazil is also very, very big on bancassurance. In the African sector, the biggest bancassurance industry or bancassurance network is in South Africa. Those have actually gone much further than most African countries, but Mozambique, Angola, that are also right behind South Africa in terms of development of bancassurance. The most important thing about the success of bancassurance in each of these countries is that it has been historical, and most of the success factors are based on the growth of the villages, growth of practices of insurance among the population, and that the belief in risk management and risk sharing. Now, for Uganda, when we look at Uganda, our bancassurance journey started much more recently. specifically in 2011, where the Insurance Act was amended to include bancassurance as a distribution channel. That was the first step in making bancassurance practical in Uganda. Before that, the Insurance Act actually prohibited the distribution of insurance services by banks, and bancassurance was not among the distribution channels that were highlighted by the Insurance Act. So the first step in our journey was the amendment of the Insurance Act to cater for bancassurance as a distribution channel. Now, the next step was the amendment of the Financial Institutions Act. Now, this is on the banking side. The banks also in the Financial Institutions Act of 2004 before were prohibiting selling directly or indirectly of insurance products and services by the banks. Now, in 2016, there was an amendment that was made to actually allow banks to be able to distribute insurance products and services. That was the second step in Uganda's bancassurance journey. Right after that, then our parliament passed a law or to amend that particular Financial Institutions Act that allowed insurance companies and banks or banks to actually distribute products for insurance companies. Now, after that particular, the amendment of the Insurance Act and the Financial Institutions Act came the next step of actually drafting regulations for the modus operandi of the bancassurance system. Who does what, who is accountable. Now that fell under the Insurance Regulatory Authority, who sat down with a number of stakeholders and they came up with the bancassurance regulations that we are actually using now. Now, those regulations were gazetted in July of 2017 after most of the people actually passed and agreed to the different regulations. And it was from then that these regulations actually gave guidelines of how does a bank actually operate, how does a bank actually apply for their license. Now, we then saw the first bank was granted the license in October of 2017, which was Stanbic Bank Uganda. And after that, there have been various applications, and I'm glad to say that we actually have over 20 banks now licensed as bancassurance agents. Now, the whole concept of bancassurance, the reason why it is generating a lot of momentum, the reason why it is generating a lot of attention is the benefits of the whole concept of bancassurance. The most important benefit of bancassurance is you have diversified revenue streams, not only for the bank, but then also for the insurance company. We'll also be looking in detail of what the benefits are for the different players in the bancassurance system or the bancassurance game. One of the players is the bank, the other player is the insurance company, and then the third most important player in the whole bancassurance system is the customer. So we'll be looking at what are the benefits of bancassurance to these particular players. Now, we've already spoken about revenue streams for the banks, which are trying now to move away from interest revenue. We all know how interest revenue is affected by different factors. You have fluctuating interest rates, you have inflation. You also have now this global pandemic, which is going to actually affect, make many people default. So that is a revenue stream that the banks are actually moving away from and diversifying to what they call non-interest revenue. New and expanded product offerings, which is totally different from the normal banking products of loans and accounts. So you're actually providing financial solutions to these particular customers, you're providing risk management, okay? The other benefit, you are also breeding customer loyalty and brand value, especially if you are looking at an example of a customer who buys an endowment policy from the bank for a period of, let's say, 5 or 10 years, you are actually tying that particular customer to your bank and to your brand. So it becomes a very hard discussion if someone is actually supposed to woo your customer away from you if he's tied to you for 5 years, rather than if it is an account which every other bank is offering. So that is also another of the benefits of bancassurance to the bank especially. Now, also we'll look at, later we'll look at the different products, but to speak to the products that are specifically designed to enhance deposits from these customers. There are those insurance products that are designed by the banks so that the customers can actually be able to deposit more and pay, transact more by the bank. So this bancassurance also enhances deposits and transactions by customers. Now, to the insurers, obviously there is a new distribution channel where the insurer can actually be able to reach and distribute some of its customers. And then also then you also make savings in terms of your costs. You don't really have to make significant investments, especially in bancassurance. At the moment, what you have to do now is actually partner with banks and provide minimal cost investments like training, and you have training. You also have to be able to make sure that your products and services, your service level agreements with the banks are actually what the banks actually do expect. So in terms of investment of this new particular segment, is something that is not very expensive. Then you also have immediate access to new markets as an insurance companies. Banks have on average millions of customers. So if your products are actually being distributed, or they're actually being shown to these particular customers, so that is very, very interesting. Then product development is something that insurance companies cannot actually also benefit from, because the banks would actually give them feedback on what their customers do expect, what would actually work, and what risk mitigants these customers actually do want, and different ways of actually doing business. So for the insurance company, this is actually something that they would actually benefit from, especially in terms of product development. Now, when you look at the customers, and these are one of the most important people in the whole bancassurance arrangement, which is the customers. There are various benefits that these customers actually get in terms of bancassurance. The first and most important is the convenience of a one-stop shop of financial services. For a customer to walk into a bank and be able to access banking, financial services, risk management is one of the most important highlighted benefits of bancassurance. The other is that you are benefited because of reasoning from these. Now, the other benefit is purchase of insurance from a trustworthy source. The banks are obviously regulated, and they are very, very particular on their reputation. So it is in the best interest of the bank to actually get insurance products that are actually beneficial to their customers. And this is one of the reasons why purchase of insurance and insurance which is sold as a promise, the purchase of insurance from a trustworthy or a customer can actually benefit from when they actually buy from a bancassurance agent. Now, also you actually benefit from different actual, one of the other benefits is you can actually get concessions on some of the other bank products that the bank actually does have. For example, if the customer is taking the insurance through the bank, you have easier turnaround time, especially in terms of production of insurance documentation, and having most of these products or documentation actually gotten to the customer in time, so that your loan can actually be processed much faster. Also, you may actually get concessions only if you are taking your insurance through the bancassurance agent, and the bank can then make concessions on pricing of your various bank products. They could make concessions on your bank account. They could make concessions on your interest rate. Those are some of the benefits to the customer of bancassurance. Now, much as there are various benefits that we've actually spoken about, there are quite a number of challenges that we have seen in our bancassurance sector up to now for the three or so years that we've actually been operating. Now, one of those is data privacy and data protection, because the banks actually share most of the information about their customers depending on the model that they use to the insurance companies, and insurance companies also share information about their customers to the banks. So there have been challenges in terms of data privacy. Sometimes this information has been abused both by the banks and insurance companies for different purposes. So that is one of the challenges that we are actually seeing in the bancassurance sector today. The other challenge that we're looking is at some unethical practices by some bancassurance advisors. Now, because the whole concept is new, we have seen a lot of pressure being applied on both the specific persons, or the persons who are selling insurance from the banks, and then on the insurance side. So because you have a lot of pressure, then you we tend to see corners being made, higher key facts about a product, and customers are actually told to eliminate some information, material facts about a different product, just so that the insurance salesperson or the bank salesperson can actually be able to close the sale. So that is also one of the challenges that we're actually seeing now. Another challenge that we're seeing is the claims service. The claims service is sometimes wanting, especially in terms of delivery, much as there are service level agreements that have been signed by the banks and insurance companies. Sometimes this is not realistic, especially when it comes to claims service. So those are some of the challenges where we are actually getting quite a number of complaints on the bancassurance. And then another highlighted challenge of bancassurance is the threat by the other intermediaries who are looking at bancassurance as a replacement of their service. So here we're looking at the insurance agents and the insurance brokers. There have been quite a number of clashes, especially regarding to insurance business. A customer could actually be banking with a bank, but has an agent who manages their business. Now, because they're a bank customer, then the bank is actually going to contact this person to be able to distribute or tell them about some of their products, and that is now causing a lot of clashes and a lot of back and forth rumors about theft of clients and all those things. But the most important thing is that one of the clarifications that they actually speak to customers, to bank customers. Okay, so for banks to actually be able to just speak to bank customers, so that that is actually negated the threat of customers being poached by banks. Now, after we've talked about the challenges, now for bancassurance to be successful, there are certain factors that actually should be in place, or certain strategies that actually should be in place for this particular distribution channel to actually be successful. Now, one of the most important is the products and the simplicity of the process that they actually use to actually distribute these products. Now, we have actually seen that the most simple, and those are the ones that are actually being taken up by the customers, products which are more complex and which require a lot of explanation and a lot of technical analysis are being frowned upon. So it is important, especially in this particular period where we are in the first 5 years of this whole bancassurance process. It is important that our products are simple, and the process of actually distributing these products and getting these products to the customers is as simple as possible. Another important critical success factor is the affordability of these products. We have seen that products which are more affordable, not too expensive, are actually products that are appreciated more by the customers. Obviously, as we move forward, there will be products which will be designed for more affluent customers, and customers who actually appreciate those products will actually be able to buy them. But the most important thing is for the products to actually be affordable. There is also an important factor, especially in the banks and insurance companies, of executive commitment to actually make the whole bancassurance product and the whole bancassurance system work. Now, there's a lot of commitment, especially from the insurance companies, to actually be able to make this whole thing work. On the bank side, this is something that is being pushed, especially by the Bancassurance Technical Committee, for the bankers to actually be able to see the importance or the contribution of bancassurance to the banks. In 2019, last year, there was quite a big contribution of bancassurance to the profit lines of the banks. So this whole process is actually now getting much more attention than it actually did get from the banks at the beginning of the whole concept. Training is also a very, very important aspect of to make sure that bancassurance is successful. That would be training of the bank staff, and then also of the insurance company staff, especially in terms of products, service, and making sure that deliverable of the service level agreement is actually adhered to. Good service is actually what pushes the success of some of these bancassurance products. So once we have the staff trained and they are able to discuss with authority the insurance products, then we'll have better success of bancassurance. Then also one thing that we've actually seen, which is driving the success of bancassurance today, is incentives to the personnel that are actually involved in the selling of the insurance products, incentives to the staff who generate leads, incentives to the staff who actually close those leads. You also have incentives to the insurance company people. So incentivization of key personnel involved in the whole bancassurance selling is something that is actually very, very important for the success of bancassurance. Also, the choice of the model. In one of the next slides, we'll actually be looking at the different models of bancassurance. What kind of model that you actually go into when you actually in this channel of bancassurance is very, very important. We'll see that some models are actually more successful than others, and this will definitely depend on what stage of bancassurance you're actually at in your distribution. Now, here we'll actually be looking at the regulatory framework, and these are some of the regulations that surround bancassurance. In one of the earlier slides, we talked about the regulations that were developed by the insurance regulator to govern bancassurance and to govern the operations of bancassurance. So in this particular slide, we'll highlight some of the regulations that the insurance regulator came up with. Those include the authorization requirements for you to actually be authorized as a bancassurance agent, what do you actually need? What is the requirement of the regulator of you? What are the obligations of an agent or a bancassurance agent? What do you have to do, especially in regards to reporting? Who are the key staff for bancassurance? Here, our bias will mainly be on the banking industry, who are the key staff in the banking sector, who will actually be able to make insurance and bancassurance very successful. The legislation on bancassurance and some of the trends that emerging in bancassurance today that may not be in the current regulations, but obviously with changes that are coming through, we hope to see some amendments in the current regulation to cater for some of the things that were not anticipated and are actually happening now. We'll just quickly go through the requirements for a bancassurance agent in Uganda. You are required to fill in an application form, which is accompanied with a registration fee. This registration fee is 500,000 for a bancassurance agent. You need a board resolution by your board of that bank to actually approve bancassurance operations. You require a letter of no objection from the central bank. The central bank should not object to that particular bank going into bancassurance operations. You'll need a copy of the license of that particular bank from the central bank. Then you will also need agency agreements with the insurers whose products this particular bank is actually going to distribute. These agency agreements should be able to show certain things regarding training, regarding premium payment, regarding dispute resolution, regarding claims settlements, the products that are actually going to be distributed, and also the commissions that are actually going to be applied for these particular products. So the agency agreement from the different insurers should actually be able to show all that. Now, when we go to the people who are actually supposed to be distributing the insurance products, there you have the specified persons and then also the principal officer. So the principal officer will be required to complete a fit and proper form. So the principal officer will have to be approved by the regulator. The specified person will also complete an application form and submit. So the regulator will also look at these specified persons and see that they actually fit, have the qualifications and experience to actually distribute some of these particular products. You will also need proof of membership to the insurance training college. You must have paid your membership fee for at least 1 year. And then also interestingly and very important is the insurance regulator has noted and employed the bancassurance regulator, the bancassurance, the person applying to be a bancassurance agent, to actually have 2 specific insurance policies that protect the customers in the event of theft or in the event of misadvice. So the bancassurance agent must have a professional indemnity cover for the principal officer and the specified persons, and then they must also have fidelity guarantee policy. This is very, very important, and it is to actually be able to protect the customers in case of misadvice or any infidelity on behalf of the bancassurance principal officer or the specified person. So, and then finally, they must also be able to have paid their annual compliance fee to the insurance regulator. So there are quite a number of other aspects which actually have to go with the application, but these are some of the most important requirements for one to be licensed as a bancassurance agent. Now, we've spoken about the 2 key personnel in the banks who would actually be able to be the ones to distribute these products or to speak to customers about these products. Accounting officer of the bancassurance business of the agent, reporting to the insurance regulator. we've spoken about, they must have signed a fit and proper form, and they must be a person of high moral standards. They must have a certain level of experience in insurance services, and also a certain level of education, one in insurance and then also in insurance related concepts. The specified person, on the other hand, is responsible for soliciting the business of bancassurance. This is the person who interview customers, speak to them, tell them about the product, sign them up, help them to fill in proposal forms. So this will also be the person who will assist in settlement of a claim, documentation. So the specified person is someone who must actually have proper identification to be able to discuss with these customers about the product. So these are the two key people in the banks involved in the distribution of insurance products and services. But much as they are involved in the distribution of insurance products and services, there are certain prohibitions that the regulators actually spelled out on the do's and don'ts of what these particular people should actually be able to do. Now, one of them is for them to actually do business without a license. So before the bancassurance agent actually gets a license, these people are not authorized to solicit for insurance business. And then they also should not induce the prospect to submit wrong information. We've looked at this in some of the challenges where, because of targets on sales and deliverables, and once these people actually do know that certain information is actually either going to make the process longer or to have a decline of an insurance product, then you induce a prospect to submit wrong information or to omit certain information. So that is a restriction on both the principal officer and a specified person. Now, another very important restriction is to receive or to demand for a share of benefits under the policies that the principal officer and specified persons are distributing on behalf of the insurance company. So this is also prohibited. The principal officer and specified person should not be a director or an agent in any of the insurance companies that are licensed. So that is also a very important prohibition of the principal officer and specified person that are actually highlighted by the insurance regulator. Another thing is for these specified persons and principal officers to policy that they're already holding because of the policy, so that it is arranged. One of the prohibited the regulator has actually put in place in terms of the actions of the principal. A lot of these are highlighted here, but there are other also actions which are implied in terms of conduct of the principal officer and specified persons, which may not actually be put here, but once those actions are actually put into check, then you actually be able to see that the principal officer and specified persons are out of line in terms of their actions. So once an agent violates or goes astray from the regulations that are actually put in place by the insurance regulator, then there are certain actions which will lead to the variation or suspension or revocation of the authorization of a bancassurance agent. One of them is non-remittance of premiums to insurance companies, which is very, very important. The The agency agreements that we talked about highlight the terms of premium payment, when premium should actually be paid. The insurance regulator has come out very, very strictly to state that premiums should actually be paid to the insurer the same day that the bancassurance agent actually receives them. And once, if that is not possible, where they actually do have certain arrangements, then they actually can be able to highlight those in the agency agreements and rectify that. Also, the agent is required to furnish the regulator with information regarding the business. These are especially quarterly or semi-annual or annual reports that are actually supposed to be submitted. Once you fail, because the bancassurance agent revoked, if you furnish wrong information to the regulator, you may actually also have your license revoked. Then also acting in a manner that threatens the interest of policy holders may also lead to the variation or suspension of your license, that is holding customers' premiums, or the turnaround times that are actually stated in the policy document and not adhered to. Complaints handling very well, then the regulator may actually come to you and be able to suspend or revoke your license. Now, moving on quickly, we'll then look at the different bancassurance models. Earlier, we talked about the evolution of bancassurance, and while and as bancassurance has actually been evolved, there have actually been more have actually been evolving together with bancassurance, and as it has actually been placed to actually be able to address the different ways of doing bancassurance. Now, so in this, discuss the different arrangements. We'll also explain the different models under bancassurance. Now, different companies or different, you could use 3 models in altogether, or you could choose one or 2 models to actually be able to go through with how you actually do bancassurance. But it is important that the stage at which you are in your also models that are actually used, and then speak about the strategy for success of bancassurance and the process and documentation that that is used, especially in bancassurance. Now, delving quickly into the models, there are mainly 5 models that are actually used to distribute bancassurance, and these have actually grown and these have evolved time immemorial, as the whole concept of bancassurance is understood more, as the whole concept of bancassurance is appreciated more. Then you have different actual models that are actually coming up. And, maybe post-COVID, there could also be a different model that that will come up after this. So we wait to see how the world model. This is a referral model, basically. So customers to the insurer his customer. That would actually be able to. This is very minimal effort or a minimum. Now we were discussing the bancassurance models, and we're talking about the referral model of bancassurance, where the bancassurance agent in this particular case would actually be able to share the information or share the contacts of one of their customers to actually, the insurance company, to actually be able to then contact this customer and try and close that particular sale. Now, this model, we note that the bank is not doing much other than just actually.
Apologies, Sylvester.
Sharing contacts or sharing the information. Yes.
Apologies, Sylvester. We need you. Please share your screen.
Okay.
Thank you.
Sorry about that. Sorry about that.
Able to.
Okay. Now the next model that we'll actually look at is the pure distributor, or the most commonly known as the corporate agency model. Now this is a slight modification of the referral model. In the corporate agency model, we see that the bank in this particular case now then plays a slightly more important role in terms of getting to know the product and actually speaking to their customers about the particular product. So the bank plays a more practical role. The bank will then train their specified persons. The bank will train the principal officers. There will be an intended participation of the bank to actually know these products and speak to these products with the insurance company to their customers. So the distinction between the referral and the corporate agency model is that in the corporate agency model, the bank is actually playing a more active and practical role in terms of the distribution of these bancassurance products. So the advantage obviously there is that with a more practical participation by the bank, the commissions that are earned are actually much more. The interaction of the bank with their customer is actually appreciated more. So that is the added advantage that the corporate agency model has over the referral model. Then you have the strategic alliance, where in this particular case, the bank and the insurance company actually come together to distribute specific products, to also be able to do joint activities like product development, marketing, in this strategic alliance model. So, but while they actually come together, they are actually independent companies. The insurance companies is separate, and while they actually do maintain their independence. The challenge is that the bank limits it with, and this also limits the choice that they are able to share with their particular customers. The other model is the joint venture, which is now also a slight modification of the strategic alliance. Now, in this particular case, the bank and insurance companies actually do invest in a new bancassurance business and a new bancassurance channel. So they are able to lock themselves in and act as one entity rather than actually be independent organizations. So the investments are joint. Profit sharing is also, profit or loss sharing is also joint, especially in terms of the joint venture strategy model in this particular case. Now, a wholly owned subsidiary is the most complex of the bancassurance models, or the most recent of these different bancassurance models. Now, in this particular case, the bank would then distribute insurance products under its brand and would actually take on some of the functions of an insurance company's an insurance company, like risk management, actuaries, pricing, and all those things. So a wholly owned subsidiary is usually used, especially in markets where their bancassurance or the appreciation of insurance is, and insurance penetration is actually much higher. So we've seen that these different models have actually been evolving over time as the appreciation for insurance grows, and also the different products are actually being brought into place. Now, when we look at the different strategies that are actually used, these could actually be looked at concurrently, especially with what we discussed earlier of the critical success factors of bancassurance. We talked about product and process simplicity. We talked about how important it is actually to train staff so that the people, the customers who they are speaking to are actually able to appreciate and understand the product properly. Customer profiling is one of the very, very important strategies for bancassurance. Here you are actually able to segment your customers into different sectors or different products in the banking sector. You could actually profile them into individual, SME, corporate, and then design products for those particular segments which would actually speak to this particular profile of customers. It is actually more successful once you have profiled the customers, then you can concentrate on, for example, selling products for individual customers to individual customers. If it is loan products, then you have products for those specific customers. Another strategy would then be able to embed insurance products on existing bank products. We have seen how banks are actually now having insurance products on bank accounts where you have retrenchment cover in your bank account, or you have critical illness cover on your mortgage, or you actually have disability or life cover on your credit product that you have. If it is a loan, you have life cover. So they are embedding insurance products on some of the existing bank products, which is one of the strategies that the banks are actually using now. Another important strategy is to promote the use of an IPF. An IPF is in full is insurance premium financing. This would help to speed up premium payment whilst not affecting the cash flows of your customer. This could corporate and SME, where premiums are much bigger, premiums are huge. So paying that premium in a lump sum would affect the cash flow of that particular company. So using the IPF would be able to have a strategy where the bank pays your premium, the customer pays in installments. That is also one of the strategies that the banks are using to make sure that bancassurance is very successful. We've spoken about incentives earlier to incentivize the salespeople and appreciate them for the efforts that they are actually putting in to make sure that the whole concept of bancassurance is successful, and highlight the winners and make sure that they are made to shine and appreciated. Profit sharing, another strategy where, other than the commission that is made on the premium that is paid by different products and customers, banks have actually also gone ahead to sign different profit share agreements with insurance companies. Some are tied to specific products, some are tied to the whole concept of premium, total premium that has actually been paid, so that the banks are actually able to get more revenue out of the bancassurance line, rather than just the commissions that are made off the premiums that are paid by customers. Promotional materials, we've seen different promotional materials. Some have been joined by the banks and insurance companies. Others have actually been done just by the banks or just by the insurance companies, where you have branding, you have t-shirts, you have calendars, you have pens, you have exclusive clubs. So these are also different strategies that are being used, especially in the bancassurance sector by the banks. Now, when we're looking at the process and documentation, once you have all that we have actually talked about, how do we actually then proceed? And what is the simple process of from sign up of the customer up to the actual closure of the policy document, and ensuring that the customer has everything in place to make sure that his risk is managed? One of the first thing is risk identification at customer touch point. This could be from the branches, this could be from the customer database that the bank actually does have, and the profiling that we actually talked about earlier. So once you have identified that particular risk, then the customer would then fill in a proposal form. This proposal form would constitute much of the information that the insurance company requires to be able to underwrite a particular risk. If it is a motor comprehensive, if it is an endowment policy, if it is a fire policy. So there's a proposal form that the customer would then fill in and submit to the bank. The bank would then forward that proposal form to the insurance company for underwriting, and be able to determine whether they will actually take on that risk or not. Once the risk is accepted by the insurance company, then the insurance company would then issue the policy and provide a debit note to the bank, which debit note would highlight the amount of premium that is expected to be paid. On receipt of that particular debit note, the bank or the customer would then credit the insurance company's account with the premium. Then that would then be the final process. Once the premium is received, then the policy document and other, especially the policy document, will then be released, and the customer is actually fully on cover. So that is a simple process, a simple bancassurance process and documentation. Now, whilst we've looked at all the processes and the models and the critical success factors of bancassurance, we'll then now move on quickly to the most common bancassurance products. Now, we must appreciate that insurance is very wide, and insurance has quite a number of products that they actually have on their shelf and are willing to distribute. But the products that we are actually going to discuss next are the most common products that are sold under bancassurance, and from my success, from my experience, these are the most successful bancassurance or insurance products that are actually moving. There will be demand for some of the products that are not under these products that we're going to discuss next, but those can be used, or those can be sold on a case-by-case basis to different customers who actually want those particular products. But with our model, or the models and the experience of bancassurance, how we only 3 years old in bancassurance, what I have seen is that these are some of the most commonly sold products in bancassurance. And then we'll also look at the distinction between life and non-life bancassurance products. We'll talk about the common life products, non-life products sold under bancassurance. Now, there's a key distinction that we actually must be able to make between life insurance and non-life insurance. Previously, non-life insurance was termed and general insurance. So you have life insurance and general insurance. But now, to be more specific, we'll term that as non-life insurance. Now, for life insurance, there's certain distinctions, especially in terms of the duration of the policies for life insurance. We have that most of these policies are long-term insurance policies, 5, 20 years, 3-year insurance policies. While for non-life insurance policies, most of them are short-term. They're usually 1 year, and then you have to renew the policy. For life insurance, they are long-term, and they are for the entire duration of the term that you select. In terms of premium payment for life insurance, the most common option for premium payment is monthly. You have monthly payment, you have quarterly, you have annually, or semi-annually. While for premium payment in the non-life sector, most of the payments are actually required to be lump sum. Now, we also look at the component of savings in life insurance. While you are actually paying for your life insurance, there are components of savings or investment in life insurance products, which would actually mean that at the end of the maturity period, the insurance company pays you the amount of money that you actually paid plus a certain interest. On the non-life side, there are no such components of actually savings. Once the policy expired, then you have actually got to renew your insurance policy upon expiry. So in brief, those are the distinctions between life and non-life bancassurance products. Now, under non-life bancassurance products, we have actually seen a demand for some of the following products: medical insurance, which people actually call health insurance, which pays for expenses that have actually been incurred by a customer once they actually fall sick. Then this medical cover would then be able to pay for the expenses of the doctor or dental expenses. So a lot of bancassurance agents are actually now distributing medical insurance, both to individual and corporate companies. So that's one of the most common non-life products under bancassurance. Accident insurance, which is compensation for the loss as a result of maybe an accident. So most times with accident insurance, this is actually being embedded on customers' products. You could have a personal accident insurance that is embedded to your bank account. You would have personal accident insurance that is embedded onto your credit card. So that is how especially accident insurance is being distributed. Travel insurance is now also a very common insurance product that is being distributed by the banks. Most times the banks have information on their customers. They know how the customers actually transact. They know the movements of the customers, who is going to China, who is going to Dubai, who is going to the UK. So they use this information to actually develop some of these products and actually sell them. So with the information that the banks have on their customers, they are able to actually push travel insurance brochures, travel insurance information to their customers who fall under that category. Then we also have home and contents insurance. This is very, very important, especially to the customers who have mortgages. This is an insurance product that is being pushed towards those particular customers to ensure that you also have insurance for your house and the contents within that particular house in case of any eventualities. So customers with mortgages, home loans, and then also customers who pledge their properties as security. This is also one of the products that is actually being pushed that way. Motor insurance is being pushed for customers who have especially vehicle and asset financing facilities. You have contractors, you have construction companies, people with fleets, transport companies. So companies or individuals who are banking and have that kind of risk is where these kind of products is actually being pushed to that particular segment of customers. Business all risks insurance is being pushed for customers who actually are in the SME sector, where you can combine different actual risks into one policy so that all the customers' risks are actually covered under that particular product. So this we have seen for customers, especially in the SME segment, traders, distributors. These are the products that are actually being targeted for them, and we've seen quite a bit of success in those particular products, and that is on the non-life segment. Now, on the life segment, the products are categorized into the finance and repayment products, where the banks are actually worried about repayment, especially if you have a loan, if someone passes on, will these people actually be able to pay? So the products that we're looking at there are life insurance products on mortgages, life insurance products on overdrafts, life insurance products on their credit cards, to be able to mitigate that particular risk. Then you also have products, depositors products. So certain insurance products are actually being designed to attract customers to actually be able to deposit money or to keep a certain amount of money in their bank accounts. Tagged towards insurance, so the amount of your insurance cover is tagged account. The more money you have on your account, the more your insurance cover actually is. So those depositors products are actually also being sold to be able to attract deposits. Then you also have other simple standardized products which can be sold by tellers of the counter or your personal banker. These are products like addition of maybe personal accident to your workman's compensation cover. You could add personal accident to your motor comprehensive cover. So these are simple products which are standardized and can be sold across the counter to customers. So we have seen that those are the most successful products that are actually being sold under bancassurance now. There might be some other products that are actually demanded or demanded as a once-off, which are then which can also still be sold to your customers, and for them to actually be able to take that benefit. But from what I've seen, the products that we've highlighted earlier are some of the products that I've seen. The number of policies that are actually being sold are quite high across the different bancassurance agents. In our next slide or next discussion, we'll be looking at savings, investments, and retirement. So this is important for us to be able to show the customer that we are actually giving them a one-stop shop, which is one of the advantages that we talked about earlier. A one-stop shop for the customer such that if we are looking at risk, we can actually be able to advise them. If they're actually looking at savings, if they're actually looking at investment, if they're looking at retirement, under the whole bancassurance umbrella, we can actually be able to advise them and give them some of this information with authority. So in this slide, we'll be looking at savings and investment needs, the need for savings and investment advice. Why do actually people need saving and investment advice? Some of the factors that affect your choice of savings. Then we'll touch on the main types of savings and investment products. We'll also speak about retirement planning and retirement planning needs, and also retirement products and factors that affect. So briefly, to actually define saving, there are various discussions or various definitions of savings, but the most simple is setting aside money that you don't spend now for emergencies or purchases for future use. So if I have 10,000 now and I actually don't spend it now, and I spend only 5,000, the 5,000 that I have left over is what I then save. Then investing, on the other hand, is buying assets such as stocks to invest and actually make, with the expectation that those assets that you buy will actually make money for you. So one of the common reasons or why actually people are able to save, some people save for emergencies, some people save for children's education, some people save for retirement, some people save for businesses, some people save for holidays or certain luxuries in life. So different people have different needs or reasons for saving. And it is important that when we are actually having our discussions with our customers, we know the reasons why these people are actually saving, and then be able to advise or be able to direct them towards the right product to actually fit their particular need. Now, the reason why we actually give them saving and investment advice, some people would say, you know what, I know what I'm doing and I don't really expect that advice. But people sometimes do not actually know how to identify their own savings and investment needs. If you speak to someone and say, how do you save? Someone will tell you, me, I'll buy cows. Another will tell you, I put it in stocks. I would buy shares. I would buy land. So there are different needs. But for someone to actually be able to identify your need is why you actually need savings and investment advice. Also, some people are not aware of the full range of products that are actually available to them to be able to actually meet these particular savings and investment needs. And these products, once you speak to customers, would enlighten them on how they can actually save cheaply, rather than the products that they actually know about and which are within their grasp. Also, there are different products which the customers need to have a choice on how to choose from. So it's important that you take them through this advice to choose from the different products. And then some of the products are actually complex and need people to actually be able to advise them. So that is why we need saving and investment advice. Now, there are certain factors which influence how much we save or for how long we save. One of them is the time available to actually achieve your objective. If you're looking at long-term investment, then you'd actually be more inclined to actually save for a longer period. Also, the amount of disposable income or the amount of money that is available for someone to actually be able to save is another important factor that determines or affects your choice of savings. If you have a lot of money available, then you actually be able to save more or to save in certain segments. With less money available, you also have limitations on how much you save and where you actually are able to save. Another important factor is someone's attitude or risk profile. Your attitude to risk as an individual is very, very important and plays a key role in your choice of savings and investment. Risk-averse people would actually be able to, we've seen that most of them invest in products that are easily liquidated or short-term products. You look at land, you look at cows, you look at property. Most risk-averse people invest in such products. And people who are not risk-averse tend to actually invest longer term. You're looking at stocks, bonds. So your risk profile also plays a very important aspect. Now, these are the main types of saving and investment products that we actually have on our market, and these are actually the most common. There are various other products that are on the market that we are able to invest in, but these are the most common. Cash deposit accounts, you have call accounts in banks, you have fixed deposit accounts where someone can invest. Government securities, you're looking at treasury bills and bonds where someone can invest and be able to get an interest at the end of a certain period. Equities, which is purchase of shares in various companies, the stock exchange. This is another investment product. Endowment policies, we have seen a huge uptick of endowment policies in our market now. So this is also one of the products that you can actually be able to invest in. Annuities, it has not grown per se, but this is also another investment product which is actually being taken up, especially with the investment clubs now, annuities and packaged investment clubs, so investment funds. These are products where money is put together, and then after a certain particular period, especially for annuities, you save for a certain period, and then the insurance company would then pay you a fixed amount of money for another longer period. So these are some of the investment products that we're looking at now. Obviously, there are others which people actually look at depending on their profile, like we discussed, and those can be actually, but specifically for bancassurance, we've seen that these are the most common savings and investment products. Now, when we look at retirement planning, on the other hand, people actually have needs, and that is the reason why people actually retire. The cost of living is increasing, and retirement planning is important for health care, especially as one actually lives longer, actually because you don't have a regular income like when you're working. So that's one of the needs for retirement. People also want to thrive in retirement. They want to have the comfortable and secure retirement, fun, tick off all those bucket items, tour the world, be able to see the wonders of the world. So those are some of the reasons why people actually be able to retire. Now, when we're looking at retirement planning products, especially currently, the most common is the NSSF, the National Pension Scheme, where a deduction is made on the customer's or an individual's salary, and a contribution is also made by the employer to actually be able to cater for one's retirement. But on top of that, different employers also have provident funds, employer provident funds, where they also contribute to someone's pension. The only difference with this is that you can actually be able to withdraw your savings or your savings from your employer provident fund once you leave that particular employer. Life insurance companies also have specific insurance pension funds where you can actually make a saving every month for your retirement planning. We've talked about equities, the purchase of shares or stocks of different companies, endowment policies, life insurance policies. For most people call them education policies now, but those are all endowment policies where you can actually be able to save for different things. Now, looking at all that we have actually been able to discuss earlier, this section of fact finding is important to be able to determine and be able to give advice to a customer or an individual adequately. So a fact find is important that you are able to determine an individual's needs, you are able to determine the amount of money that is available to save, you are able to determine whether the customer will actually be able to afford this particular product, you are able to determine material facts that are actually important to the underwriting of that particular product by the insurance company. So we'll talk about what fact finding is and the definitions. So in fact finding, you are basically gathering information or data based on a discussion or based on different methods that you actually use to get information about the customer. And then you are using that information to actually be able to drive the customer towards a certain product, to be able to advise the customer adequately of what their needs are. And these are going to identify the customer's needs. You are also able to identify the customer's personal details. Who is this customer? What is his age? Where do they stay? What is their occupation? So that kind of information is very, very important in actually underwriting some of these products. Then you are building a profile for these customers, and then you are able to see any anticipated changes in the client's circumstances. The client could actually be expecting a child, the client could be completing their house, the client could actually be going to inherit some money. So with the fact find, you are going to be able to identify some of these information. Now, the most common fact-finding methods are three. You have interviews where you have a set of questions that you actually ask your prospect or your customer. This is mainly face-to-face, where you have an engagement or a rapport with the customer. The beauty about this method is that you are also able to pick up some non-verbal clues while discussing with the customer about the questions that you're asking. You're able to pick out some of those clues. If the customer frowns, if the customer nods, if the customer is in appreciation of what you're talking about, you're able to pick out those clues. Questionnaires are a set of questions that are systematic and allow or collect specified information. You could be able to send that information to the customer, or you sit with the customer and ask them while you're filling out the questionnaire. The beauty with this is that you don't miss out on certain information that is material. If the questionnaire states that these are the set of questions, so you're going to have to ask all those questions, so you're going to pick out all that information. The only challenge then is that you're going to miss out on non-verbal clues, especially if you're sending a questionnaire to a customer to fill out without your presence. Then there are also fact-finding with interviews, where you could either use by phone, the customer calls in, or you could use the post office post. That is quite minimal now, depending on how, especially how the world is moving. It is very rare actually for customers to actually use posts to actually send information. So the main methods of fact finding are interviews, questionnaires, and then fact finding without interviews, which is by phone or by post. Now, after the fact find, you have met this customer, you have interviewed them, you have spoken to them, you have identified the need. The most important thing after the fact find is actually evaluation. There are 2 steps, which is evaluation and making recommendations to this particular customer. Out of the information that you've gathered from the fact find, then you're going to analyze that information, research that kind of information, carry out shortfall calculators, because you will have, for example, found out how many other life insurance policies he gets, what is his income, what is his expenditure, how much is he willing to save. So once you have that, then you can calculate the different amount of shortfalls and then be able to advise the customer in that particular case. Then you'd make recommendations based on your particular evaluation. So out of that, then you customize solutions, identify suitable products. Then you prepare a quotation for that particular customer and say, based on my evaluation, what you have left over maybe per month is 150,000. So we can't be able to advise and have you maybe save with an endowment policy, or you can have a pension plan where you pay maybe 150,000 shillings every month. So you prepare a key facts document of the product that you're actually presenting to him, and present that particular report and make recommendations to the customer. So after the fact find, there are 2 key methods, 2 key processes that actually go after the fact find, which is evaluation and making recommendations. Now, finally, we'll speak yes, John.
Sylvester, just for you to note that we have about 15 minutes remaining, and there are quite a number of questions that have come in. You need to give us that opportunity, and then you are able to respond to some of those questions. So as you conclude, I just wanted to remind you of that. Thank you.
Okay, thank you, John. And this is actually our last slide, where we'll looking at ethical service and client service in bancassurance, and why we actually need ethics. Ethics are actually important to attract customers and be able to tag to a particular brand. They also help maintain a reputation, and ethics also build professionalism. Why we actually need certain ethical standards in bancassurance. Now, there are certain standards that we must adhere to as bancassurers or insurers, or and individuals especially. We must be able to commit and behave ethically towards clients, manage conflicts of interest, acting honestly and fairly at all times to our customers. We must also maintain a minimum standard of professional competence. That's why the regulator has actually stated that the specified officers and bancassurance principal officers must have certain minimum qualifications. Now, if we actually don't act ethically, then there are certain impacts of unethical behavior to our customers, to our business. Which include low products that are sold and switches that are made by the specific advisors out of unethical practices. Loyalty also diminishes. Now, for an individual, the impacts of unethical behavior are quite severe. You could lose your job. You could have your license as an agent withdrawn. You could actually be fined or jailed. So those are some of the impacts of unethical behavior. Now, we'll touch quickly about complaints handling. Complaints are important but sometimes they highlight a problem that is in your business that you actually may not be able to see, or once you handle a complaint successfully, then these people are actually your ambassadors out there. So complaints shouldn't actually be looked at as distractions. How to handle complaints is the most important thing about complaints handling is, and then also you need to keep informed about all the statements right from the time you record the complaint, you respond to them, give them about the complaint and how long you expect it to take for you to actually be able to resolve that particular. The most important thing is that the customer or the complainant must act to know what is happening and when he expects that to be resolved. So that is, in a nutshell, or very briefly, what we have actually been able to come up with under bancassurance. There's a lot that we have left out. But hopefully
Thank you so much, Sylvester. And I will just dive straight into the questions that have been raised for you to then respond very quickly. And because of the aspect of time, we have under 10 minutes to conclude this. So I'll just then give an opportunity to just 3 questions, which I have written here from our participants. Question number 1, they would want you to advise on the strength that banks have over ordinary insurance agents in terms of
the challenge now.
Sylvester, are you getting me?
Yes, I can hear you. Yes, I can hear you.
So I'll just read out 3 questions, which you will handle very, very fast, and then we can close the session.
Okay.
One of the questions is from Beatrice, and she wants to know the strength that the banks have over the ordinary agents in terms of onboarding clients. What is that strength and the advantage that they have? Then there's also another question from Sylvia. Sylvia would want to know if she bought a product through her bank as the agent and it was part of the bank product and it's an embedded product, does she get a policy document as opposed to a standalone product?
Okay.
So if the product is embedded onto the bank product, if that is the insurance product, does she get a policy document as opposed to a standalone product? Then the other aspect was around the models, and I think it is David. David would want to know a little bit more about the strategic alliance model because he seems to be confusing it with the joint venture model. He gave an example of Stanley, but I would want to just tell David that Stanley is an investment company. It has nothing to do with bancassurance. It's an investment arm of Standard Bank or Stanbic Bank, and therefore does not undertake bancassurance. But our tutor will also throw a bit of light around Stanley. Those are the 3 questions. If you can, let's answer them, and then we can close the session. Thank you.
Okay, thank you, Jonan, and thank you very much for the participants. I know the time is limited, so some of your questions haven't actually been picked up. But I'll start with Sylvia's question for the embedded products. Now, when you have products that are actually embedded, for example, a bank account which actually has an insurance component, or you have a loan which has an insurance component, or your credit card which has a component of insurance, what the bank then does is to give you a key fact document. Now, that's the product that you have bought from the bank and the different components of that particular product. So it will speak about pricing, it will speak about the features of the product, and under the features then that is where the component of insurance will actually be highlighted. It will show that you have this kind of insurance. This is the amount of money that you pay for insurance, and this is the benefit that is actually due to you in case you actually have to claim. And if you have to claim, this is who you actually be able to contact to be able to have your claim sorted. So for some of the embedded products, you may have a simple one-page key facts document, which would actually be able to highlight the features of the product. Other embedded products, you may actually get a policy schedule or a simple policy document that would actually be able to highlight some of the features of the product of that particular product. So I hope that can actually be able to clarify. Now, on the advantage that the bank has in terms of, or the advantage the bank has over an ordinary agent. Now, you remember that the bank in this particular case, as an institution, has a support system that is able to help a customer in this particular case in the event that they require certain help or certain clarifications. Now, one of them is
we seem to have lost you, Rokani.
John, can you hear me?
Yes, yes, now proceed.
Okay, I was speaking about the advantages that the bank has over an ordinary agent. Now, the other advantage is that there are certain concessions that this particular customer, in terms of reductions in the other banking products that the customer actually does have. For example, if you're taking out a loan at a certain interest rate and you are using the bank as your insurance agent, the bank can be able to adjust your interest rate because you are actually taking out your insurance through the bank. So that is an advantage that you as a customer may have using your bank as your insurance service provider. There are also certain additions that the bank can be able to negotiate for their customers onto their policies, which the customer may not necessarily get if they're actually using an agent. So the bank can be able to add certain extensions, for example, to your motor policy, and add a number of things at no extra cost because of the volume of business that the bank expects to give to the insurance company. So those are also some of the advantages. So you may get concessions on other bank products, and then you also may be able to get other added extensions to your policies at no extra cost because of buying it through the bank. Now, a strategic alliance is the bank and an insurance company come together to actually do product development or underwriting of specific products to actually drive their insurance business. Now, the key differentiator of a strategic alliance is that the bank and insurance company still stay as independent entities. So the bank would have a specific agreement and say, we are going to actually distribute, for example, critical illness, or we're going to embed our credit life cover, or we're going to embed our motor insurance cover with insurance company X. So that then would be the tie-up with that particular insurance company. So what we talked about is that you are limited in the terms, in the number of insurance companies you actually can have a strategic alliance with. So if I have a strategic alliance with the insurance company X, then I am distributing, for example, the kind of products with insurance company X, and we have developed and researched about that product, and that is actually what we're going to distribute. John, and I hope that that speaks to the three questions that were asked.
Yeah. Thank you so much, Sylvester. I honestly enjoyed the presentation and the points that were coming out, especially from your side, who has been one of the pioneers in this space. Now, I would just want to add that much as you emphasize that the bank has an advantage and you've given those advantages, all is not lost on the side of the other intermediaries. For me, I always say that let us work on our relationships. The market is also still big. We can all survive in this market. Our penetration rate is still very low. Everyone can survive in this business. You can see clearly that with this pandemic, we are now going online. So it simply means that once the competition intensifies, you also come up with innovative ways of delivering to your customers. Think outside the box, get out of the box, and ensure that you are able to target those clients who have not been tapped or who are untapped. Insurance consumption or insurance penetration